Joining me now is Greg Farinello. He's the head of U.S. rates at Ameribet Security. Greg, welcome.
Ashley, thank you.
All right, so we're about 30 minutes away from the start of trading. What are you going to be following most closely today during the session?
So we need to look at the data across the board. With regard today, I mean, the markets feel and look in pretty good shape. We've had certainly some de-risking, I think, going on across the board. If you look at markets from April to where we are now, I think it makes sense here for investors to maybe take a little bit of a pause. Certainly the Fed comes into play, and we think they should be going a little bit more here, but we'll see. And I think that's part of the equation as well.
Speaking of the Fed, we heard from several Fed officials this past Friday. What should we be taking away from the remarks when it comes to a rate cut timeline?
So I think, New York Fed President Williams, I think he is very influential. For him to come out and say there's room in the near term, I think is meaningful. Having said that, I don't think, where markets are at right now, where the overall economy is at right now, is all about another 25 basis point cut. But I think for him to come out and say that he sees room to come down, I think is meaningful.
All right.
And I think that's part of the story here.
What do you think the story will be come December?
So, the story in December is going to be, I think, the forward outlook for the economy, which we're still, there is certainly, I think, there's certainly some uncertainty in terms of the outlook. We're still constructive for 2026 in general. We think right now, though, it is challenging. We've got this narrative, I think, going on about affordability. It is challenging for a lot of people out there, and you're hearing that narrative come out politically. And you could see the president has certainly made a pivot in terms of, how do we get things more affordable, I think, going forward. And the challenge is it takes time from a policy perspective.
All right, and we're going to receive a pair of economic reports tomorrow, wholesale prices and retail sales. How much weight are you putting into these reports?
Not much at this point, really. I mean, I think the data is going to be a little convoluted, I think, between now into early next year. So if the Fed wants to go here, they're going to go because they feel they need to go. I think if you look at the employment market, it's certainly a mixed signal. If I look at inflation versus employment right now, I see the risks more on the employment side than the inflation side. In other words, the overall cost structure has gone up here. And even Chair Jay Powell has said that at his last presser. He said, look, it's the rate over rate change of 3% is what it is, but the mark-to-market cost of where things have gone over the last 2, 3, 4 years, I think is still impacting people. That could impact the labor market. I think, in my view, that's where the biggest risk lies right now.
What is your economic outlook for 2026?
I think it's good. I mean, I think the economy overall is in good shape. I think it's going to take some time for some of the policies that are being put in place to filter through. But in general, I like the economy heading into 2026. I mean, it's not good for a lot of people right now for a number of different reasons. But as long as we maintain a stable labor market, I think, the economy should be fine. And I think that's where the focus should be right now.
How are you advising clients for the rest of the year, Greg?
For 2025, yeah. I mean, look, we had a major pivot in April of 2025 this year. Markets have come back a ton. So from here on out, I think like I said, we're seeing some de-risking overall. We'll get to levels across the board where I think it makes sense again. And we're advising clients to, stay patient, have their core values, and look for opportunities here in the end.
And what do you think the White House will focus on when it comes to the economy in 2026? And what do you think it'll mean for investors?
Well, look, I mean, the the regulatory side, I think, is critical, and I don't think we've seen the full effect of that. Not just from a corporate perspective, but also from a banking perspective. So I think some of that will kick in, and then from an economic perspective, I mean, look, it comes down to the consumer, how they're feeling, why they're feeling it. So jobs really matter here.
All right. And how is there anything that you are kind of following that might be under the radar now that you think might become big in the next year?
In terms of what? Market dislocations or?
Yeah, any trends that you're seeing?
We see markets in good shape here overall. There is a little bit of a battle between, I think, public and private credit at this point. But we still like markets in general. It could be a little bumpy, and we're seeing, I think, some of that bumpiness. But look, we've had a good run since April, and I think the administration, the policies that are being put in place, will lend itself to markets doing well in 2026.
All right, Greg Farinello, head of U.S. rates at AmeriVet Securities. Thank you so much for joining us at the New York Stock Exchange.
Thank you.